Ladies and gentlemen, a news just came out by DBS analysts who says that they are valuing Singtel share price right now potentially at $5.71. That's a huge jump from its current $4.56. Now, I'm going to make a personal assessment of this judgment, and I'm personally interested in this because of my previous affiliation to Singtel as a Singtel staff. And also, I used to own a lot of Singtel shares, so I see how tui I am. But I think it's important to make this assessment, and let's just watch on, shall we? So today is about Singtel. DBS analysts believe that the fair price should be at $5.71. And that's largely because they think that it's not just a legacy old-fashioned telco, but now they have re-rated it to be a digital infrastructure provider, infrastructure platform provider, and largely playing the AI space. So therefore, right now it deserves a higher valuation. Plus the fact that it has got strong average revenue per user that is ramping up. So I thought I want to take a look at this assessment and see whether it's fair. Usual disclaimers are that this is not a video that is sponsored by Singtel. I didn't have any conversation with Singtel on this, despite my close affiliation with them. This is just me doing an independent assessment of it. Singtel is a STI heavyweight stock and also a heavyweight CPF stock. 1 million CPF members still have Singtel stocks. So I think it's very important for us to assess this. So let's take a look and see whether this Singtel share price indeed, could potentially go up to $5.71. So the catalyst of this news report is from DBS Group Research. There's an analyst called Sachin Mittal, and he actually gave a recommendation of buy. And the target share price has now been raised from $5, which I think it's an easy hit if the market sentiment is better. But now he's pushing it to $5.71. Wow, okay, that's a big jump. And this is not just about earning noise. This is really a high uplift to the share price. So what has changed in DBS Research views is that there are two big upside. Number one is there are sharp upside from data center. Nexera, which is Singtel data centers business, is driving structural growth with AI-ready infrastructure. And this is a huge upside that could potentially capture AI business. And also the other one is that the mobile ARPU is now stabilizing. It was declining, but now stabilizing and potentially even giving an uplift. Now, what is ARPU? It is called average revenue per user. That means per subscriber. So it is potentially an uplift. So Singtel is no longer a pure telco play. It is a AI and a powerful connectivity play. So I think this has gave DBS an uplift in their expectation. So talking about Nexera, the data center growth engine, it is an AI-ready infrastructure that is ready to serve AI needs of many corporates and companies, and is at the forefront of the AI business. Now, I'll be frank with you, I don't know this business well enough, but I know the CEO very well, the CEO of Nexera. I used to work for him as his right-hand man. His name is Bill Chang. He used to come from Cisco, then went to Singtel, and Singtel now is a veteran there as well. Really very in tune with IT, AI, and things like that. So I'm very confident he's a powerful executor, good leader. So I believe in him, that you will drive this business really very well. DBS thinks that there is a huge upside in the data business, and I won't go into the detail why they think that is, but they believe that this is a high growth infrastructure, not some utility like earning kind of business. So the AI ready data center in Singapore will be ready in 2026 and potentially serve as a huge uplift to the Singtel group of companies. Now, some rumbling about some potential Singapore Technologies Telemedia Group data center merger or acquisition. I remember that the CFO actually said something about this, that they have verified that the interest is there. They are already in advanced talk. So Singtel and KKR, they're already in partnership with this, is now talking about this. So maybe there's some huge uplift in this area if the acquisition were to go through. Talking about mobile ARPU, the average revenue per user is now stabilizing. I think that's very important, and potentially, even some uplift. So India, Indonesia, Thailand, Australia, Singapore are all stabilizing from from a ARPU perspective. So that's important to have some stability in the average revenue per user, because there was a bloodbath across the world on mobile competition. In Bharti Airtel and in Optus, the ARPU stabilization and growth is already happening. Okay, so it's happening and having benefiting the Singtel group of companies. So basically, to cut the long story short, DBS thinks that all these are upside. Therefore, they believe that there will be a powerful uplift in their valuation of Singtel. So that's their perspective. I think their assessment is not wrong on this one. This is more visible, easier to see. So currently, right now, their market cap is at about $75 billion Singapore dollars. Their share price is roughly about $4.56 as at today, right now. But let me give you my view. I've said it before, I'll say it again. Singtel Group is made up of many different parts. One of the major part is Bharti Airtel. That stake itself is worth about $50 billion. 50 billion. Then the whole of Singtel is worth 75 billion according to the current market price right now. It can't be. It can't be. The Singtel telco part of it, plus Optus Australia, plus the data center, plus NCS, plus the whole chunk of all the overseas associate cannot be worth $25 billion. That's basically a sum of part is not adding up properly. So it's way too conservative. So I personally think that there's some upside to this, and I can see the Singtel management team actively realizing the valuation of all these little parts to let the market know that, hey, we are worth a lot more than that. Now, if the valuations were all to come in, I think at least you're worth, $100 billion for sure. So my perspective is that Singtel valuation should be worth at least $100 billion, at least $100 billion. So from that perspective, from its current market capitalization of $75 billion, there should be a potentially a 33% uplift, which means that the share price should be worth much more than its current $4.56, potentially hitting $6. Now, at $6, which is a 33% uplift from where it is right now, it seems not far away from what DBS is recommending. So two different approach arriving roughly along the same ballpark. So if that were to happen, many investors in Singtel will make a hell of money, especially the 1 million CPF holders of the Singtel discounted shares. So if that were to happen, wow, congratulations to all. Of course, I would jump even more because I used to have handover lots that I sold them all away. But I think it's quite interesting to see how this thing will unfold. Let me put a disclaimer. This is not a recommendation. I'm not doing a forecast. I'm just doing mathematical analysis, trying to assess what DBS assessment is see whether it's fair or not. It's rare that I agree with DBS, but this time around, I'm actually in alignment with their assessment. But Singtel shares is very volatile, and it goes up and down with the economic outlook of Singapore and the region. So it's very hard to say whether it will realize this share price. But let's watch and see whether this will come to pass. Okay. So thank you everybody, and I'll see you tomorrow in a video or live stream. Bye bye.